it's going to be a headache of a transaction where everything could be avoided by going with a private lender who is professional, who has millions of dollars.
Hello, and welcome to this week's episode of the Real Estate Investors Club podcast. I'm here with Serujan Kaneshalingam.
Got
Did I
it.
get it?
Yes.
Yeah. Okay, good
Yeah.
stuff.
You got a rebate on the interest rate.
Wow, that was fast. Let's see if I can rack up some more discounts by the end of the show. And Serujan is a mortgage broker. He's going to explain us exactly what kind of lending he does. Serujan, let's just jump right in. Tell me about your journey through life that has led you to be sitting here with me on the podcast this morning.
Yes, definitely. Thank you so much, Terry. Much appreciated. So I started when I was 22 years old. I'm 29 now. As a mortgage broker, I didn't know what I was going into. I was just lost, and I was figuring out something to do in my life, and yeah, I heard about like mortgage broker, how they can work pretty much from everywhere. Probably they can be on the other side of the world, and they can pretty much do clients because everything is these days we can do everything virtually. And I heard of this person who was working from Vietnam, and he was dealing with clients from Quebec. I'm like, what the hell? What is this job? And I was always interested about real estate. My parents always bought real estate, and they never like as immigrant parents, they never tell you. Pretty, for my case, they never told me like why investing is good, but I saw them invest, right? And I saw them invest. I saw them making money, and I also invested with them at 18 years old. Now, so I made some money, and so I'm like, you know what? If I can be in real estate, work in real estate, I'll learn faster how to invest. So what's the best job I can get in real estate? I was looking around and I found mortgage broker. I didn't like a real estate agents. I didn't like that selling houses. I was all about numbers. I was studying at Concordia in finance. So I was always interested about finances, micro economy, and yeah, so that's pretty much how I got into the mortgage business. And yeah, after that I fell in love. I didn't know what I was gonna what I was getting into, like, but I fell in love with the business.
Okay.
Yeah.
And so, like, explain to me. So you start this at 22, you're now 29.
Mhm.
What does that path look like between that time and now?
It was really hard in the beginning because mortgages were selling debt, right? 300, 400,000, $500,000 of debt, and especially when I started, I used to work as security guard before, and before that at McDonald's. So I didn't have a big network of people that were ready to buy properties. Especially even my own friends, they were all young. They were still at school, so it was really very tough for me. But you know what? I told myself, if I can work on marketing, work on getting better at sales, work on getting a bigger network, in 5 years when they'll finish school and they'll be doctor or they'll be engineers, I'm gonna already like I'll have all those experience, and I can pretty much I'll be so much far away and pretty much maybe make some money out of that. So that's what I told myself, and it worked out pretty well for me. Like now I'm pretty well known in the industry. People knows me for alternative solutions, private lending solutions. If you talk to any real estate agent, any broker, and if you say I need an alternative solution, and if they can do it, they know who to call. It's me, pretty much. That's so it was a tough path, but it was worth the journey.
All right. So we're going to get into the specifics of exactly your business model a bit later.
Mhm.
But so first I want to just put a pin in something, because I think this is something that comes up often when I talk to people who are younger or who started when they were younger. And the thing is, when you start out in the business and you're 22, 23, 24, 25 years old, the reality about your network, your friend network, is that they're too young. And so you end up in this kind of weird situation where you're like punching above your weight. Like you're 22, you don't have a whole lot of experience, and you have to be selling to an older group of people and to appear credible with them. And that can really be a bit of an uphill battle. And I think it's nice to hear a story of someone who says, yeah, well, like, don't forget that you will grow into that network. And it's normal that when you start out young, you're facing that challenge. Maybe you can
Yeah.
just tell me a little bit of like the concrete things that you did. Like, how were you able to get better at sales and marketing? Like, where did you get that knowledge? How were you able to build your network? Because I think that's doesn't matter if you're a real estate broker, a mortgage broker, or just an investor, like someone who's raising capital. Like that's a challenge for everybody who starts out when they're young.
Yeah, pretty much invested all my money into myself, going to seminars, sales seminar, marketing seminars, funnel seminar, like digital marketing seminars, all those seminars that helped me. I used to travel to the States to get the best knowledge possible. I know I was young. I know I had so much to learn. So everything I did is invested in myself. And also go to those nine, like 5 to 7, 5 5 it says better in French. So yeah, I was just out there, I didn't take a no for a yes. Every time I had a partner, even though like people don't really tell you, they don't want to work with you. They just listen, and next thing you know, then you never hear back from them. I'm like, okay, what did I do wrong here? And I was always like trying to perfect myself. And also, mortgages. There's more than 100 products. As a mortgage broker, we don't work for one bank. We're not a mortgage specialist. We're not a banker who work for that bank specifically. So we have to learn all the products. So I made sure that I learned every product by heart. I know exactly what are the solution for every client. So when I meet a client in front of them, and they're talking about their solution, their problem actually, and I know exactly what to do. I tell them exactly how we can solve this. And when you're able to find solution, they don't really look at your age anymore. They'll see you as an expert. So I made sure that I was getting the information needed, so people don't reject me because I was young. And people these days, when sometimes I go to bars, clubs, and everything, much less now, but they still caught me. They still caught me at my age. So imagine at 22, I looked like a freaking 17 years old. So it was really tough for me. But I made sure that because I had the knowledge, nobody saw my age, and
Yeah.
everything was done over the phone. So and I never told my age, so I was always closing without telling my age.
Yeah, it's funny. I also started when I was pretty young, and I'm more on the property management investment side. But like, believe me, when like a little blonde 25-year-old with like, an accent shows up, like the construction guys weren't lining up to take me seriously. So I do know what that feels like. Okay, but so let's shift to talk about your business a little bit more. So you say you're the guy who people call when they are out of solutions. So maybe you can just break that down to me for me like a little bit more specifically. When I think of a mortgage broker, I think of somebody who, you like if I'm a real estate broker, I will call you to get my clients pre-qualified, and then sometimes I hit a snag. Maybe you can tell me what it looks like from the other side.
So what I'd like to start by saying is, to understand alternative solutions and private solution, you need to know the whole financing well, how it's structured. So there's the A side where we have the big banks, the big five, the big seven, virtual banks also. That's when you have a good credit score, good income. You have everything that you need to qualify easily with those banks. Okay. Once we don't have one of those things, then you don't qualify anymore in their criteria. Then there's B lenders, or we call them alternative banks, B lenders. Those banks are also big institutions. They're all over Canada. They do lend in Quebec, and they're more flexible, especially for self-employed people. Let's say you have a low income, but you're actually making money. We could look into your deposits. I don't want to go into the technical stuff, but I'm telling you, they're much more flexible on the credit score. If you have a low credit score, it is possible. If you have low income but you're making money, it is possible. And then let's say, because they're also banks, they do have some criteria. And if that doesn't work with them, Then we can go on the private side where everything is possible. And on the in the private side, we don't like usually banks study when they approve a file, it's on their credit, their credit. So meaning how well they can pay, how well they can manage their money. But on the private side, it's all about equity. So as long as you have a good guarantee for us, a good collateral, there's equity on the property, we're able to purchase or we will be able to refinance. So it's purchase meaning you need to have a big down payment. So these are the solutions. So once I know it doesn't qualify on the A side, we can look into the B side and we can look into the private side. And that's for in the residential. Same goes for the commercial where we could look in the A side and then B private. And there are different reasons why we go commercial on the B in the B and the private. We can go into that if you have if those questions comes later.
Yeah, no, sure. Can you explain that to me? I think it's on the residential side, it's quite clear because they're looking at your personal income and like, for example, if I want to buy a house, but I'm self-employed and I, declare low income, it's possible that my business is making money while my personal declared income is quite small. So that's like clear to me why maybe a B lender would be the right solution, or in some cases, even private lending. But explain the commercial side to me a bit more.
The commercial side, the big issue with these days are delays. Sometimes you have this wonderful property, wonderful deal that you just got, and you need to buy this property as soon as possible because the vendor is very motivated, but you don't know how long he's going to be motivated to sell, and you're going to make some money. And so what happened is it can take up to like a month or 2 months, 3 months if you're going short side with the CMAC to get this deal done. So we go sometimes some investors what they do they go on the private side directly to with the private because it's much easier, less documentation, less of a headache on the criterias. And once we get the ownership of the property, then they look into the A side where they can take the time to refinance the property. That could be one solution. The other solution is most properties these days, especially in the big cities, the income is low but the value is high. So the big banks will ask us around minimum 25 to it can go up to 60%, 60% some in some cases because the income is low. Okay, so what we have to do is either you put more down payment to purchase this property, or you can go on the B side where they don't calculate the same way. They calculate as if you were buying a property in the residential side. The GDS, TDS, they more look into the TDS, meaning that we look into how much your income, your building income, and they'll take your personal income, or if you have a business, they look into your business income. Can both together? Can you? Is it possible with both all those income you're able to pay the property? If you're able to pay the property, then they finance it as quickly as possible with minimum 20% down. As long as you're able to respect the criteria, we can go up to 60% TDS instead of 60% instead of like 60% down payment. So it's much less. The down payment needed is much less than regular side on the regular side. That's pretty much the main reason. Low income, the same as residential. Where if you have a low income on the property, we're able to take your personal income. That's pretty much it. And your credit score, yeah, credit score is very important. If you have a low credit score, unfortunately, you're not able to do this transaction. Even though we're qualifying the building, we still want to check your credit score. If you don't have a good credit score, unfortunately, they can give you a loan. But on the B side, we're able to do it. And the private side, same scenario as a residential, quick transactions. We need to act quickly. We need to buy this property. That's for investor side. Auto constructions, where like I have this recent deal where I had to fund this person who was building a 50 apartments, one building with 50 apartments, and in the middle of the transaction, the bank didn't want to go forward anymore. So what I had to do is come in, give the money. So it's around 10 million dollar. We had to give this money as quickly as possible, and I made it happen in 1 week. Usually it takes them a month to give, even in private, that kind of money. So when we're talking about millions of dollars, it can take up to a month. maybe 3 4 weeks. But I made it happen in 1 week. And this person, he paid like a $600,000 of interest. He's going to pay $600,000 of interest for a year, but he's making so much money out of this the whole deal that he doesn't even care. Like he's making more than $10 million of profit.
Mhm. Have you really been listening to the episode, or has your monkey mind been taking you off in one direction or another? Our mental habits can be our biggest assets or our biggest liabilities as we pursue certain goals. For me, the biggest performance gains have always come from training my mind. In my book, Mindful Landlord, I talk about how you can train your mind and how you can apply some of these strategies to your journey in the real estate field. The book is available on Amazon and also on its website, mindfullandlord.com. Now I'll stop evangelizing for the power of mental training and let you get back to the show. You know, when you came and did the talk for us at the Real Estate Investors Club evening, you put a lot of emphasis on understanding the private lending ecosystem before you involve yourself with it. And the two things I found really interesting were when you were talking about needing an exit strategy and knowing who you're working with. So I wonder if you can sort of like go over that again, because I found that was like really important information.
Very important, very important. And like in the private side, there's no structure. There's no government that structure the private side of the business. So anybody can be a private lender. You could be a private lender. I could be a private lender. Let's say tomorrow, if I win millions of dollars from Lotto, I could pretty much become a private lender. But what happened is a lot of people they go into the private side because they see that there's money to be made, but unfortunately they're not doing it for the right reasons or they don't know what they're doing. So you could work with a major private lender, and you could also work with a professional one. Obviously the amateur one, he has maybe less experience. He doesn't know what he's doing. He could be much cheaper, but do you really want to go with this person? For 1% or 2% cheaper. Imagine, let's say he only has $500,000, and he's actually lending you $500,000 for this property. Okay, at 80%, when most private lenders, professional private lenders, they're at 75 because he doesn't know what he's doing. Okay, you got told that the 80% is there's no risk, market is going good. They're private lenders. They need a buffer in case that the client is going defaulting the payment. They need to take back the property. 25% of buffer. It's just the limit. They maybe will get out of the deal by selling the property and not lose any money. That's a maybe. Because in Quebec it can take up to 6 months, maybe a year to take back the property. It's not like as quickly as we might think. So this person, if he needs the money, let's say you take a term of 6 months, and after 6 months you're like convinced that in 6 months you're able to like reimburse him. But in 6 months, after 5 months after, you're like, hey buddy, I need another 6 months. You're like, hey, I need my money to put my girl to school. She's going to Harvard, and I need $400,000. That you're in big trouble. You're in big trouble. But you need to find another private lender who knows he's gonna only lend you 75, and you're at 80, so they can't even do this deal. And if in case they do the deal, they'll charge you extra fees, more fees. It's gonna be a headache of a transaction where everything could be avoided by going with a private lender who is professional, who has millions of dollars. This $500,000 doesn't stress him. And if in case that we need a renewal, he'll understand. As long as you pay it on time every month, we'll do it. That's the reason why you should always work with professional private lenders. Even for 1, 2, 3% cheaper, you shouldn't do that. It's not worth it. The stress that comes with it is not even worth it. That's why I always preach to go with to go with professional private lenders, especially go through a mortgage broker, because a mortgage broker, his goal is to make sure that we find the right private lender, negotiate the right conditions, right rate, and make sure that we have an exit strategy. Private lender, unfortunately, you could say he knows stuff, but he doesn't know how banks criteria works. So let's say you come to see a private lender. You're like, hey, listen, buddy, I need 6 months. Don't worry about it. I'll refinance it. Don't worry about it. Just give me the loan. Fine, okay. I know Terry. I done business with her. She's an honest person. I'll lend her 500. What happened is 6 months later, you're having big trouble refinancing the property. That can be avoided by going through a mortgage broker to find a private lender. So we'll make sure that once you go into the private lending, we structure so you're able to refinance in 6 months, either on the residential side, either on the commercial side, or it could be on the business lending side. So always worth to go with a big lend, I mean a mortgage broker to find a private lender. Always.
Hmm. And so, like, say, so you kind of mentioned the exit strategy a little bit, but like, I wonder if you could just maybe develop that a little bit, because I think, sometimes the world of private lending sounds almost too good to be true. Sure, the interest rate is higher, but they'll finance anything, right? And I think it's one of these things that's a bit like flipping, in that if you're 6 months off in your calculations, like it can sink your battleship. And so just like maybe if you can kind of explain, the importance of an exit strategy and how you can help build that for people when you're managing the financing.
So the first thing to do is find what's the problem, why we are going with a private lender in the first place. Once we know what's the problem, it could be low income. If that's the case, how are we gonna now make sure that they're gonna increase the income of the property? How are we gonna do this? And I'm gonna tell you exactly how much do you need for the value of this property, for the amount of apartments there, how much do you need to get a regular loan with a regular bank. So if you know exactly what to do. I'll tell you exactly A to Z, like what are the criteria to get a loan with a regular bank. So once you go in the private side, you'll be 100% confident. Okay, I know exactly what to do. Serujan told me this. Okay, let's make it happen. That's we're looking to keep the property. You're looking to refinance the property. But if it's to sell the property, it's a quick purchase. Do the optimization, do the renovation, and boom, we put it on sale. Make sure that we're actually not like being too optimist and not ask for like the minimum terms just to pay the minimum fees and the minimum interest. But after that, let's say you take 3 months. There's some private lender that can give you 3 months. Let's say in 3 months you don't sell your property, then there's going to be maybe a renewal fee of $5,000. That could be avoided by negotiating with this private lender a term that is much more flexible. So I make sure that based on the problem, I give them different plans: Plan A, Plan B, Plan C. In case the Plan A doesn't work, in case the Plan B doesn't work, so we look into the residential side. I'm sorry, the bank side, the A side, and if A side doesn't work, I'll tell them, okay, Plan B is B side, and here's what we have to do. So they have different options. Once they go with the private lender, and in case any of those doesn't work, there's also a possibility. I make sure that the term and condition we negotiate with the private lender, it's how we say that, it's more than flexible. More than flexible. Yeah.
And appropriate to the deal.
Do I answer well the question?
Yeah. No, that's perfect. So before we move on to a like bit of a different topic, maybe you can just throw out some current benchmark rates that people can like hang an idea on how much that money is going to cost them in the A, B, and private sides.
Yeah. A side we're talking about 3-4%, right, these days at the moment. B
Still?
side, yeah,
insured, right?
Yeah, insured.
Yeah.
On the B side, we're talking about like 6, 7, 8%. I'm doing a deal with 9% at the moment. Capital interest, okay. And on the private side, it starts at 9% when we're talking about big volume, like $5 million, $10 million deals. When we have to deal with like semi-privates, and you can go up to 12, 15. Max is 15, especially with professional private lenders. We don't go beyond 15, and plus fees. There's brokerage fees and there's lending fees. You can go based on the volume. Like the bigger the volume is, the less it's going to cost you on the percentage. But you could go up to 1, 2, 3, 4, 5% based on the volume. So every deal is different. All you have to make sure is it worth it? Like to understand if it's worth it, do the numbers and make sure that all the expenses of this loan is covered by the profit of the property. The profit at the end, if when you're going to sell the property or when you refinance, make sure that everything is calculated together.
Okay, thank you. All right, so like now we're kind of coming to the end of our time. I want to just ask you. I have two questions, so maybe we can try to get them both in because I think they're important. So in our industry, very often, people are all over social media, like showing projecting success, and I think one of the problems is that very often we don't talk openly about the lifestyle hits that we took to get where we are. You know, I'll give you an example. Like when I started investing, I lived in Hochelaga for 10 years on the ground floor of a triplex with my tenants upstairs. And there were hookers on the corner, and like my friends lived in condos on Nuns Island. And like that was the lifestyle hit that I took to get my career going. So I wonder if you could, tell the audience a little bit about what that was like for you. Like what kind of sacrifices did you make to get where you are?
Great question. Just today, I slept at 11 o'clock and woke up at 5. Went to the gym, and then I'm here at the office for our webinar, not webinar, our live, our podcast. So there's a lot of sacrifice, that's for sure. Um, like how do I say this? Like for me, it's like every day I make sure that I'm winning at something, to make sure that I'm excited for the next day. Since I have a lot of projects, it doesn't really affect me. I'm really loving the process. I'm trusting the process because I have a lot of big dreams, big ambitions. So because I have big ambitions, I make sure that I'm actually taking the actions I need. Right? If you have your ambitions here and your action is here, obviously you're not going to be motivated. You know, and you're going to be desperate. But because my dreams are very big, I make sure that if I want to achieve those dreams, I need to work harder. So it doesn't really affect me, but I know that when people talk to me, I'm like, "How do you do it?" And they said I'm not normal. I'm I'm not normal, and I do understand that. And it's just how big is your dream, Because I have big dreams. I know I have to work hard. Yeah. That's
Yeah.
I know if I answer it correctly. In the process, I know it's a lot of sacrifice. Waking up early, not having enough sleep, managing stress, dealing with problems every day. The reason why we're well paid is because we deal with problems. And if you're not no, excited about dealing problem, excited about having those stress and having those people who are not happy, who you need to make them sure that they are happy. It's a lot of thinking, a lot of process that are going through your head. It's every day. It's a battle, and I love it because like if I want to go to the next level, I need to make sure that I handle those solutions, those problems these days.
Yeah, I love that answer. I first of all I love asking people this question because I never really know what they're going to tell me. But I love that answer. I think it's so important for actions to support goals. And people say you're not normal, but like Serujan, like so many people have goals up here and their actions are down here. And just to understand that those two things have to be at the same level, like it makes you not normal because there's very few people who are actually able to line up their actions with what their goals are. And so to achieve whatever it is they're setting out to achieve. So I think that's a really great point.
Thank you. I really appreciate it.
Let me ask you the last question of the interview. So,
Yeah.
in our industry, again, there's a lot of stuff that people talk about on a regular basis. And then um, maybe there's things that we bring out less into the public light. What do you think we should be talking about in our industry that we're not talking about enough?
In real estate,
Yeah.
maybe like the sacrifices like you just mentioned, like how hard it is to like be a real estate investor, especially you in your case dealing with tenants and everything. Like being an investor is not all about the glamour, the money, and how you could easily become rich, make money. So it's also all about like the sacrifices, dealing with tenants, dealing tenants are when are happy, all the stuff. Maybe like we need to take the time to talk about. That's pretty much sure. The risk factor, a lot of people don't actually talk about the horror stories, how people lost money in real estate, how people like went into the private side, and and then they lost everything. They lost their property because they didn't do the numbers correctly. They went with the wrong private lender. So that's the reason why when I talk to clients, I make sure that hey, listen, here why you're dealing with me, here why you're actually winning in this transaction, because I make sure that you're well structure. So talk about the bad stuff about our industry. Maybe that will help people understand. Okay, do I really want to do this, or you know, or I don't want to do this. Like, unfortunately, fortunately for me, I went to the mortgage side without knowing anything. Just with the fact that I love the fact that you could pretty much work from everywhere in the world. But at the end, fortunately, I fell in love with this business. But a lot of people just get sold by the people who are in social media, but at the end they realize that it's not for them. So you need to make sure that it's for you before getting into the business. So
Yeah, I
having
think that's a really great point. That people get attracted sometimes by the shiny objects. If it's the money or the flexibility or the work from anywhere. But the truth is that those of us who end up staying for 10 years, 20 years in the business, it's because we actually love the business. And like, I have this conversation at least once a week when I say like, c'est un métier. You want to be a property manager, you want to be a mortgage broker, whatever it is, you want to really excel at that. Like, it's a skill, and it's like you're an artisan, right? Like you have to learn your trade. It's a trade. That's the English word I'm looking for. Like, it's a trade, and you have to learn your trade. You have to get very good at your craft, and you have to love it. And whatever little niche you're in, all niches are not for everyone. I could never be a mortgage broker. I don't like numbers enough, but I can be a property manager because I can deal with the tenants. I have the patience and the curiosity. So it depends like on your character as to where you fit in there, but you do have to love it, I think.
definitely, if you don't love it, it's not for you.
Yeah. Serujan, thank you for having this conversation with me today. It's been real fun. What's the best way for people to connect with you if they want to learn more about what you do?
Yeah, sure. Like, there's no excuses. They can. There's no excuses to not find me. Like, I'm on TikTok, I'm on IG, I'm on Facebook, I'm on LinkedIn. Just write my name on Google, you find me. So yeah, every way of contacting me is good. Social media, or they can just call me with my number, so I can share it with you, so you can put it on
Show notes, yeah.
the show notes. Yeah, yeah, pretty much all means of contacting is good.
All right. Thank you for sharing this time with me.
Thank you, Terry. Take care. Huh?
Bye.
Ciao.